Now, this is definitely a change of pace, guys. Palantir stock is down 4% on the day. Yeah, in the midst of a green day after we've had, like 20 green days in a row for Palantir, it's finally seeing a bit of a sell-off. So we have to do an update in this video, break down the charts, my thoughts. You guys know the deal, so hit the like button. Feel free to subscribe. If you guys want to join my email stock newsletter, which is free, by the way, that is linked down below. And you might as well check out my Patreon if you're interested in my weekly portfolio updates. All those links are down there, guys. And now, cheers, of course. Take a sip of your coffee, and let's dive into it. So, Palantir is down 3.6% on the day, and it's actually up $3 off of the low from earlier today, so it was even worse, in other words, right? I think we were down, let's see, $8 roughly, yeah, about $8, but percentage-wise, how much were we down there? Yeah, almost 6%, so earlier, this stock was getting hit aggressively. I mean, it's still down, but only 3.6%, so we've recovered some of those losses there. And overall, guys, why are we selling off? I mean, there's nothing in particular that I can pinpoint it to. I think we're just selling off because the stock's so hot. You know, it's seeing a bit of a pullback. Simple as that. Nothing crazy. Nothing that, is in the news, really. It just got very hot. Up and away for many days in a row, right? We just needed a pullback. And the more you pull the layers back here, you look at the longer time frames, you realize that. I mean, it looks like here Palantir had 1, 2, 3, 4 green days in a row, it looks like. And even here, man, back to 2 weeks ago, earlier in June, we had many green days in a row. You're seeing it on this chart. And on the 1 hour chart, you'll see it even better. So we were due for something like this. I mean, you can see last time we had a pretty notable pullback was, the 5th of June. I mean, guys, that was like, 3 weeks ago? We had a pretty big pullback this day. We went down from 132 to 117. That was a big pullback, 12%. So this is nowhere near that. But, yeah, I mean, we haven't had a red day like that in about a month almost. So we were due. We were due. That's what it comes down to, guys. We were due for a pullback. And in the grand scheme of things, on the 4 hour chart here, you're noticing we are very much in an uptrend, obviously. Nobody's questioning that. Nobody's denying that. We're in an uptrend. And honestly, if you're looking to swing trade Palantir, maybe you want to trade a quick little, in and out type deal. Not financial advice, but based on these charts, hey, we're right at the 180 SMA. We've held this spot for months. Each pullback, we've gotten a rebound. So it's not guaranteed. It could come down a bit more. Who knows? It could slip to 130, 135. That might even be an even more attractive spot to get in. But either way, this dip could open up a swing trading opportunity as well. Because honestly, man, I'm even considering it, even as coming from a long-term investor perspective in the stock, because I don't think the momentum's done yet in the short term. I don't. I think this could end up being a nice rebound play. Look at the markets today. Everything's up. We're down because this particular stock got too hot. It's not like the stock market is crashing right now. I mean, it could next week. Who knows? But we're seeing an obvious divergence here between Palantir and the overall stock market. So I think we're going to get a rebound. Call me crazy. We'll see, though. Not guaranteed. Do your own research, the whole 9 yards. Not financial advice. You guys know the drill. But yeah, that's what we're looking like, down about 4%. And let me show you these indexes. The S&P today hit an all-time high. SPY hit 616.39 today, taking out the all-time high from the middle of February, where we hit about 613.14, right in that ballpark. So, yeah, I mean, who would have thought this thing crashed all the way to 479? After Liberation Day, we were down 21% from all-time highs at that point, and now we're at 616. So all the panic pretty much is gone. You know what I mean? Obviously, there are still risks out there. The higher this gets, the more I'm like, ooh, maybe I should get or find a hedge or something. buy some puts or something to kind of hedge against it, because all the worries aren't out the window yet. It's not like we're free and clear. There's still a trade war, still geopolitical tensions. So the market is, almost, it's not super euphoric, I would say, yet. But the VIX is down to 16. If this thing were to get down to like 13, 12, 14 on the VIX, I would definitely consider, all right, maybe buy some puts on SPY just to play it safe, because then if we get a little pullback or a 10% correction or something, we can at least make money on those puts. That's kind of the idea there. But it's kind of all about timing with that. That's a whole nother topic for a whole nother video. But at this point, man, all-time highs are being hit. They're being hit, and it's going to be interesting to see what happens from here. Same thing on QQQ. We just took out the 540 all-time high from back in February. Now we're at 549 all-time high. So I feel like we could see this rally continue a bit. A breakout here essentially is what we're getting, because stocks haven't been at all-time highs in 4 months, guys. Think about that. NASDAQ and the S&P, they have not been at all-time highs in over 4 months, almost 5 months now. So we might get a bit of a rally here, a breakout. But I'm telling you, keep an eye on that VIX. If that keeps creeping down a bit more, let me actually pull it up. The VIX is at 1640 right now. Look how low it is, right? Look how low the VIX is on this chart. Each time it's gotten down to like 14, 15, 16 over the last, 7 months. This is dated back to December. Each time we've gotten down to 14, 15, we've seen a spike. So you got to realize that. We're getting pretty beaten down on the VIX, and there are still risks out there. Like always. I mean, there's always risks, but it's not like the trade war is over or geopolitical tensions are cooled off. You know what I mean? There are still risks. So I'm tempted now to get a hedge, right, on maybe, puts on SPY or QQQ or whatever, or maybe get I forget, there was like a long VIX ETF or leveraged ETF I used to trade a while ago. I forget the ticker on that, but maybe something like that. But yeah, I don't know. What do you guys think about that? All I'm saying is VIX is super low. If we do get a lot more upside in the short term on stocks, if we get another 2-3% run, 5% run, now that we're hitting fresh all-time highs, if this sparks a new rally, maybe I'll consider a little hedge there. We shall see. But yeah, I mean, let me pull up some stocks quickly here other than what we've covered so far. Nike's up 15% today, guys. I'm not a big fan of Nike. I've said it before on the channel, but man, it is up 15% today after they double beat on earnings, which is good, but there's a lot of bad. They're predicting, I think, $1 billion in fiscal 2026, I believe, in terms of costs related to these tariffs. So $1 billion with a B, yes. And their revenue's down 12% year over year, and their net income has been eviscerated. Last year, and I remember this because I was reading it last night, last year they did $1.5 billion net income, I believe. And let me double check. Was it 1.5? Either way, but this year it was $200 million. So think about that. Think about how bad that is. I'm pretty sure it should say it right here. Either way. Yeah, think about how bad that is, right? And their sales are getting collapsed or are collapsing. We all know that. And it looks like Nike currently sources 16% of U.S. footwear from China, CFO says. So, yeah, a lot of that. And overall, we know competition, their business. They kind of tried to go direct to consumer. That didn't work. Now they're kind of backpedaling on that. New CEOs in. Yeah, there's a lot going on. So at this point, guys, funny enough, we just talked about hedging puts on SPY. I was thinking about buying puts on Nike earlier today. I didn't do it yet. I probably should have, because when I was looking at it, it was up 18%. Now it's up 15%, so I could have made a decent little trade there. But I don't think this is going to last. If you think that it's up and away here from Nike, it's going to go to 85, 90, start breaking out. Why? Why would it? Based on what? What are the fundamentals pushing this stock right now. You know, everything's negative. Why? Everything's bad. Yeah, they double beat, but who gives a crap? Sales are down. Tariffs are going to crush them, right? Guidance, I forget what the guidance was, but it can't be good, right, in this environment. I just don't see it. I just don't see it. So I think, yeah, maybe, okay, fine. Maybe we go to 75. Maybe we hover there a little bit, but I see this getting back to the 60s. Honestly, I really do. In the next month, 2, 3 months even, there's just no way this is going to last. Fundamentals, they can't push the stock, or they're not good enough to keep the stock over 75, 80, or to even get it to 80 plus. In my opinion, I could be wrong. What do you guys think? But yeah, we're gonna wrap it up right there. I'm curious to see what you guys think. A little rant there on Nike, but yeah, I'm curious what you guys think. Hit the like button, subscribe. Feel free to join the free email stock newsletter. Check out my Patreon for my weekly portfolio updates, stocks I'm buying, trades, all that good stuff. That is linked down below. And with that being said, cheers. I'll catch you in the next video, guys.